Afternoon, guys. Today's Tuesday, the 15th of December. I just wanted to show you, hopefully quickly, an opportunity that's come up on my radar today. Looking at the DAX, the German DAX. It's the main stock market index for the German listed stock exchange, and it's basically, I think it's the 30 top companies in Germany, basically. So yeah, very liquid instrument to trade. Can be very profitable, and obviously vice versa as well. So yeah, but yeah, I came across this one by mistake, but the first time I traded this one was basically because I saw an opportunity. It met my conditions. I entered the trade, and I didn't realize how big the gains were when I got in. So this one's actually been probably my most profitable instrument to trade. I think I've got my win-loss ratio on this one is very high across all of them, and it's one of those ones where you can really swing trade. If you just want to swing trade, these ones and the other stock indexes are really good because you get these big moves down and you get these big moves up and big moves down. So when you time these right and you get in at the right time, you get these big moves like this that happen quite regularly. So yeah. But what I want to show you for this example is just looking at the daily chart. How do you enter a position? Because it's easy to say, yeah, we've got a pattern completion that completes there. But if I zoomed into say the daily, say look at this current candle here, which is basically a indecision candle, right? I'll explain what the indecision candle is in a moment. But if I zoom into the 1 hour or 15 minutes, what you get is there's all this mess in the charts, right? So let me just go to the start. Let me just go from last night, which is the 14th. Let me just show you. So the market would have closed at 8 in the morning, US time. We'll get US time as well, okay? Australian time, sorry. Sorry. Oh, this doesn't make any sense. Okay, bottom line is, let's say this was the start of the day, and that's the end of the day. You get all this movement up and down, so it's not just as simple as saying, yeah, I'll just buy there. Within this space, you're looking at probably, that's 322 points, 3% move in between. So it's quite a big move, and you can lose a fair bit of money, so you just don't want to enter in the daily chart, okay? But it's giving me a kind of a doji or indecision candle, which is basically one of these candles you can probably see. It's just like something like that, and you might get something like this, right? That's an indecision candle, so it basically says to you that no one knows what they want to do. Like bears don't want to go bear, bulls don't want to go bull, but no one's really making a move. Usually with these ones, it means that there's a continued. For me, good chance of the time, that means that the next candle will be a continued move to the downside if the market's already in a bearish move, or bullish side if the market's already in a bullish move. So there's a few ways of trading that one, and I'll kind of explain to you at the end what I mean by how useful those candles are. So, but I just wanted to show you how to look at the DAX daily. So I'm looking at the daily chart. I've had this pattern in here for a while. You may have seen already. And I'm looking at completion at around the 10.221 area. All right, we've had that. Right, we've crossed below, so we went as low as 10.11.0. And I've basically said that if we violate this level here, right, then the pattern's invalid. Therefore, there's no pattern. Just close the trade or get stopped out of the trade. So yeah, there is a fair bit of risk in this trade as well. Given that it's on the daily time frame, you're looking at that's that much risk, right? That much risk for this much reward for target one, that is. All right. Okay. So 1-to-1 risk reward is not too bad. So if you put in a small position, you might be able to be okay. But that's how much you're looking at. All right. Now, just to let you know, like, I've got like, 4 or 5 different brokerage accounts. Each account's doing something different, okay? So I have an account, and I don't have a name for this, but it's basically where I trade very, very, very small position sizes. Because what I've noticed is that one of the things that is good for me is that most of the time I'm right. Most of the time I do know which direction the market's going to go in the higher and the lower time frame. Problem is, like, it's the execution. That's why most traders are really good. They know what they're doing. It's just the execution, right? When to get in and when to get out is that they've got it wrong, or emotions, fear, greed, and all that kind of stuff causes you to lose the trade. When because what I'll find is that I'll do all this analysis, right? 3 weeks later, right? I find out that 3 weeks later it goes exactly how I planned it to go. It'll go up this way, go down that way, and go up that way. Problem is I didn't win on the trade at all because I just didn't execute it properly, or I didn't execute at all. And that's really frustrating. So what I've done is I've set up another account recently where I trade small position size, say 1 lot, on a micro account or 2 lots, whatever you want to call it. And I just put in the trade and then just close the application and just leave it there. And what I find is that when I come back to it, it's done what I hoped it would do. The risk is minimal, and actually, make, say for example, just thought, $50 or $20 or whatever it is for that trade. It's not doesn't seem like much, but when you start adding that all up together, it becomes pretty good. So for this example, I've got a risk reward 1-to-1. Right, I'm looking for target 1s. I'm not going to look for target 2s. So if that is the case, then I will be looking for a potential profit of 473 points. All right, so I'm looking at 4% jump potentially. Right. Let's have a look at if the potential target lines up. Yeah, it's about close to about there. All right. So what I want to show you is how do you actually find an entry point. All right. You can enter it on there. If you've got plenty of money in the bank sitting there doing nothing, yeah, just enter there if you want, because those little drops won't matter to you. But I want to look for the best entry point. I want to minimize as much risk as I can. Okay, because when you're in that losing position, even if it's small or big, sometimes it can, emotions start to take over, and you don't want that to happen because it just builds and builds and builds and builds, and then before you know it, you'll either get out of the trade too early, or you'll let the losses ride for too long, and then that's going to cause all sorts of dramas. Okay, from an emotional perspective. All right, cool. So what I usually do is I usually go from the daily, and then I go down to the 4 hours. So my trading time frames are the daily, 4 hour, and the 1 hour. Okay, that's my trading time frames. Daily being the higher time frame, where I can get an overarching view of what's going on. The 4 hour is my trading time frame, which is what I use to. It's my analysis time frame. All right. So every time I look, I always look at the 4 hour chart. The trading time frame is the 1 hour, so that's where that's the time frame I use to enter trades, right? To find, ideal entry points, right, on the lower time frame. I also have a 4th time frame that I use only sometimes. I don't use it all the time. I try not to. It's the 15-minute time frame, right? So that gives me 1 level deeper, right? So this example, I've gone all the way down to I think 5 minutes, just for fun. So if I look at the 4 hour, I've actually got 4 patterns, right? 4 potential patterns, right? This is going to be really cool. I'll show you what happens. So I've got the Cypher pattern. So this is the daily time frame before, this one here. And I've drilled it down to the 4 hour. Now, don't worry about the background color, because I just usually like to change it up a bit. So it's just my eyes, that's all it is. So I've gone down to the 4 hour, and you get another potential Cypher pattern down here at 10,809. So this, if the market goes back here, that's a sell signal for me, okay? Right? And then I've got all these other smaller patterns down here. So if you look at the actual chart, right, what it's done in the last day is it's clearly in a bearish pattern, right? Clearly in a bearish pattern on for that particular day, right? Overall, I don't know. I'll have to look at it later. It's done a retracement, right? And then it's resumed the move down. Now, the 38% retracement is usually a trend continuation a continuation signal for me. So that means the market's going to keep going down. Any more than 38% usually could still mean continuation as well, but there are certain levels you don't want price to retrace too much of. Okay, and then you get another retracement. Okay, and then you get another one, and then another one, and so forth. Right. So clearly in a move down. Now, what do we want to find? We want to find a reversal, right? We want to know where is the market likely to go, right? And at the point of the potential entry, what is the risk to reward, right? And how likely is it that the market will go back up again or go back down? Depends on which direction you take, right? So I'll drill down. So that's the 4 hour. I'll drill down to the 1 hour. Right, now if I look at the 1 hour, right, we've got another potential cypher pattern, right? This time for completion at around 10.54. So if the market goes back up there, I'll be looking to sell. Okay. I won't get into more than that, so I'll just go to a 15-minute. Again, another cypher pattern. Perfect. So this is already telling me that the market's moving very harmonically. The market's very harmonic, right? We've got there cypher decompletion down at the 10.379. So that's another potential selling opportunity, right? If you're looking at day trading on the 15-minute time frame, that's perfect. Now, if I go down to say the 5 minutes, right? 5 minute, I've got another cypher pattern, but this time it's a bullish cypher pattern. All right. So the difference here is that this is a buy signal for me. So what I'm waiting for next, right? And this hasn't happened yet, is on all the other patterns I just showed you just before, I'm waiting for the decompletion, right? It's already done a C completion. You need a decompletion before it's valid. This one, however, I'm waiting for the C completion. So I'm waiting for the market to go up to about here, confirm the C leg, and then move, and then reverse, go back down to look for a D leg. Okay, once that D leg is in, I'm buying for sure, 100%. Okay, I'm not going to buy here. I'm going to buy here, right? If you look at it from the daily perspective, it looks bullish and you can just buy it anywhere. But if I look at it from the lower time frame, I get, the difference there is 130, 40 odd, points. That's a big difference, So you want to look for the best opportunity, right? So that's that. But yeah, it's already done an A to A, A to B, B to C, almost to C, looking for a D completion down here. If the market goes back down there, I'll be looking to buy, right? My stops will go at about here, right? That's my initial stop loss. Let me just write that in so you can see it. Stops. And then entries around here, right? So my risk to reward, I'll do the targets. Actually, I'll do the targets now. So if you're trading this on as a day trade, right? Your target would be, if you're just trading purely off the pattern, right, and that's it, nothing else, just want to get the quick buck in there, then your targets would be at 10.212 and 10.245, right? Now, the market just opened just now, actually. That's all right. So what I'm waiting for is price to go back down there, and then you can just sell it there. But the problem with this is that your risk to reward is too great. That's the problem with the soft pattern. But they usually generally have a very good win percentage. That's why a lot of people take them. But let me just have a look. I'll just put it there. Let's just say my risk to reward is, so what time is it? 6 o'clock. Yeah, the DAX just opened just now. So now keep in mind that the measurements are probably not exactly correct. So that probably did complete a C leg, but I'll have to double check later again just to see. Either way, it doesn't really matter. If it goes back down now, I was going to buy it anyway. This is basically just to help me build the case for an entry. So I want as much evidence as I can before I actually enter the market. It doesn't even have to complete this pattern, right? I can find other ways to determine if this is a good entry zone, right? So that's your risk and that's your reward. So you can see, oh shit, wait, hold on, stuff that up. I was thinking, why is it, that can't be right, there's too much risk there. Okay, so this is your risk, right? This is your initial reward. So it's about just under a 1-to-1. If you go for, say, target 2s and you're looking at a bit over 1 to 1 1 to 1.5 risk reward. But like I said, this I'm playing the daily pattern, right? The daily bullish pattern. All I've done here is I've just gone into the lower time frame to find the best entry, right? I want pinpoint entry. So with that being said, right, now what I'll do is I'll just put the risk in there again, right? And I'll show you how cool this is. Far out. Come on, click. There we go. So this is the risk, right? So if the market goes back down there, I'm buying. I might be able to buy it whilst I'm doing this video too. So that's my risk, right? Now I'll just make it so that I can see, because once I zoom out, I won't be able to see this risk. Okay, let me give me a second. I'm just going to put in this. I reckon I'm going to put in this order now, just in case I'm not missing it. Hold on. Okay. Sorry. 10.157. Okay, 10. Okay. I'll just put it in there first, just in case. Okay, cool. So if I zoom out to the daily, what you get is, right? And remember, I'm playing this off the daily, okay? Then I get, so you can't even see my risk. Where is it? There it is. There we go. Oh, there you can see it, just, right? So that's how much I'm risking for this trade, right? I can put a bit more for one. I can put it down to about there, right? If I want to. You just want to manage the position size to make sure that you're not actually risking too much. Your position size isn't too big that you're risking too much for this trade. But my reward for this is potentially oh shit! Hold on, wait. Give me 1 sec. Oh, yeah. So I haven't drawn it for this one. All right, that's okay. Give me 1 second. I'm just going to draw it quickly so I don't get you confused. All right. Hold on. I did it wrong again. Okay, there we go. Okay, cool. So that's the Cypher pattern on the daily chart. Okay. Now, so I'm risking that much. Now, technically, if price can still go down further, like I said, to down here before it becomes invalid. Okay. But I don't think the likelihood of that is going to happen, given that we've got potential bullish signal to buy. Now, if I just run off that pattern alone, then my targets by default, by using the default rules, will be the 38 and the 61. So I'm looking at a target around here. If I want to just look for just one single target, second targets could go around here. So now my risk, which is I've drawn down here, right? Now my reward is potentially from here to here, right? That's obviously more than what I'm risking, right? Now, here's the cool part about this is the cool thing about predictive analysis. This is why I love patterns and not just using the pattern, but using other means of predicting potential price movements, right? So just bear with me, sorry guys. I'm just trying to make. I don't want to go too fast. I just want to make sure you kind of see what I'm doing, because it is helpful. It is very good if you know. I'm not fussed with showing you this stuff, because at the end of the day, this is why. At the end of the day, it doesn't matter whether you get this or not, right? Because at the end of the day, your emotions are going to be what's going to drive your decisions, right? Or not. Even better if not, right? So that's why I don't really mind if people know this stuff. Because at the end of the day, there's a reason why only 95% of traders make it, and the other there's only a reason why 5% make it and the other 95% don't, right? It's mainly because of just emotions and psychology, all right? So it doesn't really matter. I can give you the prices, I can tell you when to buy, I can give you the exact time, the exact date, the exact millisecond. Anyone can. But at the end of the day, there's going to be a lot of people that will still lose because the fact is they won't follow that rule. They won't follow the plan. And yeah, that's what causes it. Because no one listens to anyone, right? Okay, so cool. So this is how much I'm risking, right? And that's my potential reward. Okay? Now, what I can also do is I can use more predictive analysis and say, well, I can increase that reward further, right? I can basically increase it by this much. Right? By that much. Maybe. Don't know yet. I'm just throwing it out there. All I'm saying is I'm just using additional analysis. I'm not saying it will happen. Don't know what's going to happen. You can never know what the market's going to do. You just make, not guesses, but you apply probability to all this, right? So the market could potentially do these, could potentially move this much, give me an extra reward, almost 50% more reward than this. Now, why do I say that? It's mainly because we've got another pattern here. We've got a Cypher pattern here, a potential Cypher pattern on the 4 hour, right? With a completion around 10.809. So maybe if this does continue, right, then we might be able to see this pattern price try to complete this pattern. And we know that the pattern is valid within this range, right? So the entry of the price can be anywhere between here to here. Generally, you enter when it completes because that's where you get the best probability, but it can still go up more, right? It can still go up another 177 points. So another entry could be there, right? You've got structure along here, which is a good sign, right? Not much structure around here, right? Oh, there is a little supporting structure. But that's how it is there. So I'm just saying that just say you got in here and you rode it all the way up there, right? And when you get to this point here, you can get out of the trade fully. You can close part of the position, half the position or quarter, whatever you want. But then you'll start to ask yourself some questions, going, well, how far could this go up? You know, should I leave a position there just to trail it and see how it goes, or should I just be looking for a retrace, potential retrace, and then maybe buy another position, maybe buy another lot or two for another ride up. You know, there's a lot of possibilities. You don't have to play by the exact same rules here. So given that, so if that happens, then I've got, this is the risk, that's the reward, right? Right, that's just for target one. Right now, you can be more conservative and go, well, I just want to take targets here, where our last structure level was. Right, so I've got this low here, I've got this potential low here, so that you can do whatever you want really. But just to give you an example of what I mean by when I say potential price. Alright, so I'm just going to bring this window over here, just to give you some perspective. Jesus. Sorry, just give me a sec. Okay, cool. Alright, to give you some perspective. Alright. What was it again? GR30. 30. Okay, cool. So if you look at the daily. Alright, so where did I say entry was? Let me just bring up the other one. Sorry. Just want to make sure I get it right. The numbers right. Don't want to give you any bullshit numbers. So I set the entry about 10.158. Let's go 10.158. I'm going to write that down somewhere so I don't forget. 10.165. No, 158. Yep. Stops at around 10.107. Now, like I said, you don't have to put stops here. You can put more. You can put it further down. It's up to you, right? It depends how big your position is to begin with. Anyway, you shouldn't be trading like a high position that you can't afford to lose. If it goes down, you can't afford to lose. You know, that's just stupid. Okay, so 10.158 is 10.158, and then 10.107. Okay. Alright. Where is it? 10.107. Alright, here, and then I've got 158 is here as well. Sorry guys, I just want to double check and make sure I got it right for you. Okay, so, okay. Like I said, you can increase that more, because when you're looking at the daily chart, there is a possibility I can go down further, right? Okay. Alright, so what was my target? Target was, on the daily, being, let's just say we go for this, let's say we go all the way up to that pattern there, we're looking at 10.794. Right? 10.7. Okay. Alright, let's just do some calculations. So if I enter here, so there, 10.107, 7, let's put a target of, say, fuck, what was it again? Shit. Damn it. 10.107 is 10.809, okay? 10.809. If I put a small position, one lot, let's say one for one lot, right? That's $100. Doesn't seem like much, but you know, look how much you're putting in, $11. That's how much I need in my account to be able to play that trade, right? Now you can say, well, that's really cheap. Well, it is cheap, but what if the market goes the opposite direction? What if it goes down and you're actually minus $50? That means you've got only $50 in your account. That's why people get done with leverages, because they don't understand. They'll just put in something like 100, like this, or 50, and they'll say, well, it's not all I need to make this much. Yeah, but what if it goes the opposite direction? Do you have enough money in that account to cover it? So what I usually do is I won't go into how much I choose, what numbers I choose, but let's just say I put it in. Usually with the DAX I can trade. You know, depends on what the strategy is really, but let's just say we put in 10 lots, which is 10 units, which is $110 to get in. If I'm looking at that target, I'm looking at $1,000.66 as a potential target. Now, this doesn't mean it's going to happen all in one day or within the hour. It could go for over the course of a few days, right, or a week. Who knows? But with that kind of trade size of the trade, where you're looking at the daily time frame, you know, it's possible that it could be up to a week. There are times where I might even trade 25 lots. I won't say it's dependent on strategy, okay? But let's just say, be conservative, we'll say 5 lots. $55 in the account. You know, if you had $1,000 in the account, you know, you're looking at potential $533 as an example. So it's really up to what your plan, your money management plan is. But very good trade, very worth taking, and yes. I just really want to show you how we use multiple time frames to look for the best entry signal. Because if I enter it from here, if I just looked at it, enter it blindly, I would just say, oh well, I think the price went down to about this level here, 10.203, and then when you drill into the lower time frame, you start to realize, you know, you could have got a better entry, right? And then you can look at actually support levels, resistance levels to see if it actually respected it, because price can still keep going down. You know, like it might seem okay at the higher time frame, but the lower time frame you might be 100 points off. So that's how I do it. So I hope that helps. Oh yeah, one more thing I might show you while I'm on this, right, is using candlesticks, right? So you've got this candle like this, but what people usually do, what I'm looking for is some kind of, there's two things you can do. You can put in the order and just wait for the market to hit it, and then you're in the trade. The other thing you can do is you can wait for market to give you some kind of a signal, an entry signal or confirmation signal, what I call it, before you enter, right? You wait for the market to give you a clear signal that's showing that it's a reversal, right, or a pattern. So if I was to do that, then I'd be looking for something. What other people tend to use is what they call a doji, right? Not everyone does it. I don't really look for them as often. But a doji is something like this, where you've got. I'll just be very quick with this one. I don't want to spend too much time on it anyway. A doji is when price kind of does this kind of. And, okay. kind of get this kind of signal. And you get, you know, something like this. Just as an example, it doesn't have to be the exact same pattern, right? Right. You get something like this. Right. So basically, what I was trying to show you is you kind of get this big bearish move down, right? Make this red, okay? This big bearish move down, and then the next day the market puts in something like this, like a doji or some kind of or a indecision candle, where it kind of gaps down. I think it is. And then the next day you kind of look for another signal where the market kind of shows some kind of a reversal, another continuation of this candle here. Now, you know, but at the same time, even though it's giving you this bullish candle, you might still have something like this. You know, it might still have something like that, which is basically saying that at the market open, there was some selling pressure, but then towards some point in the day, buyers came in and pushed this back up. Pushed it back up to a high of this level here, but then there was some selling pressure towards the end to move back down there. Okay, so that's what it basically means. Now, when you see these sort of candles patterns, you know that there's a bullish, there is something going on in the markets that people are looking to get in on, right? But I wouldn't get in on this straight away. Usually I'd do is I'd wait for, say, I would wait for a retracement. So say this didn't happen yet. We've got a high there. We closed the day there. The next day I'd be looking for price action to be something like this, to go down, to retrace to some level. Maybe retrace to these highs here, right? And then enter the market to go up. So there's different ways to go about it. But it works on all the time frames. Lower, it could be 1 minute, it could be 30-second time frames. It doesn't really matter. It's all the same. It's all driven by, each of those candles are driven by humans, psychology. All this, all what you see here, everything you see here, right? A good way to explain, a good way to kind of summarize what you're looking at is basically the market here, the chart here is the visual representation of all the market participants, right? And their actions and their decisions, whether it's emotional decisions, logical, greed, fear, whatever it is, that's what it's showing you, right? The visual representation of all market participants, okay? That's the best way to explain it. But hopefully that helps. Yeah, if you've got any questions, let me know. But yeah, very simple way to use 5 multiple time frames. All right, guys. Good luck. Speak to you soon. I'll do another video on the pre-FOMC tomorrow or tonight. Cheers. See you guys.